So, hi everybody, it's me, Mercedes Burgos-Rosas again from Keller Williams, Northwest Indiana Real Estate, although I do both Illinois and Indiana. Here again with another lender and good friend of mine, Bill McCracken from Andersen Team. I should say it's People's Home Equity, and they have a wonderful saying. I think I'm going to let him say it really quickly, and then I can go on with the rest of the spiel.
No, we're the Andersen Team, and we're powered by People's Home Equity.
People's Home Equity out here in Oak Brook, but they cover Illinois and Indiana. The purpose of the videos that I'm doing are because I would like my clients to be better prepared with regards to what they're looking at getting into when they're buying either first home, refi, maybe you're selling, want to buy a home, relocating, whatever the case may be, to know that you have resources, people like Bill and others that we can reach out to, and also myself, that can help guide you through all this. I'm going to go ahead and let Bill go over, because we did touch upon the other video with the other lender that we had the other day with Top Flight with regards to what's required or what they look for when you go to apply for a home loan, be it your income, the taxes, whatever the case may be. So I'm going to let Bill go over a little bit about himself with regards to how everything works with their particular brokerage, which of course, broker versus bank, which he can touch upon that for you also, and any special programs they have. And then also do remember that I do speak Spanish, si habla español. They do have somebody on their team that speaks Spanish. So at the end of the video, we'll go ahead and give you contact information for both of us so that if you'd like to reach out to Bill and his team, they can go ahead and go over any questions you might have. Also, please do any questions you have when we go ahead and list the video, please send those over to me. You can inbox me, Facebook, LinkedIn, Twitter, whatever the case may be. And we can go ahead, and if you want them specific to Bill, we'll have Bill address them. Specific to myself with regards to the actual real estate arena, I can go ahead and take care of that for you. And again, we're both Illinois and Indiana, so he can help you out in that aspect. And Bill, why don't you tell them a little bit about yourself?
Okay, my name is Bill McCracken. I'm with the Andersen Team of People's Home Equity. And, I've been at this company for about 4 years now. And prior to this, I was at Chase for 8 years. Big difference in underwriting, guidelines, things like that. It's not that, there's a huge difference, but at the end of the day, everybody has the same rules.
Okay.
The bigger you are, the more stricter you tend to be on the rules.
Okay.
So that's why we kind of have more leeway than, call the big banks.
Okay. So then, that's what I was going to say, because I have some clients who prefer, like, that they'll go with somebody like Chase or Bank of America, Wells Fargo, things like that. So, like when you said it's a little bit more lenient with a brokerage like you guys, to what degree? Is it the credit scores, what's required? I mean, because I don't know what the lowest credit score that you guys might be able to work with.
Oh, we could do as low as 600.
600, okay. And like I said, this is another thing. Different lenders have different requirements, like you said, but maybe you do have bad credit, in your eyes, or another large lender's eyes, but there's another lender that might be able to have a program that'll help you be able to qualify for something under their specific program. So that's why I want different lenders to go ahead and give you guys their perspective on what they do and how it works. So say somebody with 600 comes to, and any other credit score, above that, what do you require them to bring in, and what do they need to have? And like I said, we're going to reiterate this because I want to make sure that everybody knows what they need to do. Another thing is like FHA versus conventional, whatever the case may be. So when they're bringing in, what's your great checklist, I should say, and then what they might need in the bank, with each different program that you look for.
Yeah, absolutely. So, I can't express this enough. It's very situational.
Okay.
So whether someone is self-employed or, they get paid hourly or a salary, or, how they do their taxes, it's very situational. So, ideally for FHA, a good score is 640. At 640, we're able to go up to 55% debt to income, and we don't have many restrictions. Where when we go under 640 to 600, there's more and more restrictions. They start looking at if you're getting a gift or not, and then the debt to income will vary based on that.
Okay. So when he mentions a gift is like, say for instance, somebody in your family is going to lend you $1,000 towards your down payment. Lenders the government in general are very strict as to where that money's coming from. They want to make sure it's your money, where you're getting it. It's actual legal income and an actual gift. So what they'll do is they'll have somebody write a letter letting them know that, they are indeed giving you this gift towards your down payment, or in helping you out. And then this way they can better track that and prove to the government, especially if it is an FHA, because that's a federally insured loan, that's where it's coming from. Now, before you go ahead and make huge deposits, huge withdrawals from your account, you always want to contact your lender first. Ask them, put together a game plan, reach out to somebody before you're going to do anything. And one thing, like I always stress, and like I stressed in the last video, do not take out new credit until you close on your home. You want to make sure that everything is intact from this point forward until you close on the home, because any new credit will jeopardize your credit score and, put you at the risk of not being able to get that loan. So anything, I always tell people, ask the lender first in the financial aspect. Ask me first before you do anything, because like I said, I know people get excited. They want to go buy the new furniture for the home, but don't realize that you can't get that furniture on credit until after you actually have the home, because that does pull down your credit score. With regards then to, for instance, you said stricter from 600 to 640. So I know usually it's 2 years taxes, then they're W-2s if they're W-2'd, 1099s if they're self-employed or independent contractors, right, like myself, which I'll definitely along the way probably need help and assistance from my lenders to help me figure out my own eventually. But specifically, especially for self-employed people, one of the things that I do stress is a lot of people tend to, or they have rental property. A lot of people tend to show huge losses on taxes because, we all don't want, IRS is IRS, but I think it doesn't show profitability, correct? If they have huge losses on their taxes, that hurt them if they apply for a home loan?
Yeah, absolutely. So, once again, it's situational, but when you get your taxes done and you're trying to get a house, it's always good to show as much money as you can, because we're going to take an average if it's increasing. So let's just say, last year you made $100,000. This year you're making 120. We're going to take the average of the two, so it'd be 110 for the income.
Okay.
However, if it's declining, we take the lowest.
Okay. See, so that's a key thing to keep in mind. Let's see here. The other thing, debt to income ratio. I know you said there's like 55%. Can you explain how debt to income ratio works? Because some people might not understand how that works with what they have on their credit report being the debt versus the actual income that's coming in.
Yeah, so it's the potential house payment, which is the actual mortgage, which is principal and interest, homeowner's insurance, and plus the taxes. And if there's an association, we include that as well. Okay. So we have that, and then it's plus all of our other minimum payments. So what liabilities do we have? It could be, a car loan, it could be credit cards, it could be student loans. If you were divorced and you had to pay child support or alimony, that's also on there too.
Okay.
So
those are key things to keep in mind. For instance, if you want to buy your first home, but not only that, later on, if you want to go ahead and look into investing in property, rental properties, flipping. I mean, you have people that do an array of things. These are all things that you want to keep in mind, because it's huge difference between a cash deal versus having to get different types of loans. Like FHA, for instance, homes would have to have certain repairs, be up to certain code, certain things that FHA would require to be repaired. Or with conventional, there's a little bit more leeway if you really, really want that home and say the seller's not willing to fix things. So there's different, now is there anything else besides, or is there different things with the conventional FHA, different programs that are coming out now that might be helpful to people who maybe a first-time home buyer, or maybe has had a home that would like to purchase again?
Yeah, absolutely. There's always grants going on, and especially the first of the year wasn't that long ago. That's usually when these plans get replenished. So definitely check with the local city you live in to see if there's any grants, things like that. If there's any specific program, you could always give me a call and ask me about it, and we could always look into it together. I'm not trying to be specific with anything, but yeah.
Okay, and like you said, so if it's certain grant, like I know And we both do Indiana, Illinois. So like Hammond, Indiana has a down payment assistance program. Lake County, Indiana has a down assistance program. Let's see here.
Illinois has IDA,
which IDA is not in Indiana yet. So some people get a little bit confused with the different programs. But always reach out to, especially the county and the city that you're in to see. Reach out to us because maybe we can go ahead and if you're specific to a particular area, we can help you out and find those. The other thing is that we did mention student loans. Now, I am in real estate now, and my kids laugh because I have my MBA and I have a master's in human resources management, along with my BA in political science and criminal justice. I'm supposed to be an attorney. Got talked out of that one and got the 2 masters. Hey, but I'm in real estate, which, this is for me, it's been an absolute pleasure working with everybody and getting to know all of you out there. But I have a lot of student loans. So what are the guidelines with that? Because I know now when they switched it, I believe almost 2 years ago, that kind of hurt a lot of people.
Yeah, because before if it was deferred, it wasn't that big of a deal.
Mm-hmm.
But now usually we go by the minimum payment or 1% of what's owed.
1% of what's owed. So 1% of your total, right? The total that you have out there balance.
Yes.
So that's something to look at also. That's going to be factored into your debt to income ratio. Is that if you have $100,000 in student loans out there, it's going to be about $1,000 payment per month that they're going to factor into what you owe per month in your bills. So that's something you're definitely going to want to look at. I can't stress enough to my children. I have my second oldest in her third year of college currently right now that do not, if you don't have to, avoid student loans as much as possible unless it's absolutely necessary. Different programs are out there for different areas, just like the grants are for kids, depending on family's income. So I know it's hard. There's every case is, different, special, has different key factors to it. So that's something too that you want to reach out to ask us. Definitely. I mean, Bill can always say, hey, if you're going to buy a home and you have children that are going into college, you can always reach out to us and be like, what can I do? Some type of savings plan for the kids, different programs that we might be able to refer you out to someone else that'll even be able to help you. And that's the whole point of all of this is that all of us being able to network with you guys to be able to better prepare you in the long run for, not only real estate, but overall, that financial, how can I say, comfort, because you don't want to be in a situation where for me, it's going to be even difficult to probably purchase my next home because of the fact that I have all my student loans, but now I work with people like Bill and others who would be able to help guide me and assist me to different programs that might be able to help me with those student loans.
Yeah, and I couldn't agree more. The best thing to do would be to call me and, really we'll go through your situation and then we're going to know which program is the best for you. And then from there, we could make certain adjustments. And, if we can't pre-approve you right then and there, we could put a game plan together where maybe it's 6 months from now or maybe it's a year from now. I've done them 2 years later. And, just every so often check in and, just make adjustments really. So.
Right. See, so definitely maybe you're not, or maybe you feel right now that you can't go forward and purchase a home, but you can go ahead and put the game plan together. So that's a key factor. So don't be afraid to reach out to anybody. Go ahead, ask questions. That's what we're here for. And basically, people like us, once you got us, you've got us. So I tell people my clients are like an extended version of my family. So I'm your realtor forever once you have me. So after you even close on that home, we're going to go ahead. You can call us. How do you get a homestead exemption on your home? Where do you need to go to get the tax credits, things like that? Those are things that you always want to stay in touch with us, and don't be afraid to reach out and ask. It's never a bother. We'd rather you be, better prepared and throughout life, have somebody that you can count on and resources that you can go to. It's always going to be the best scenario for all of us. Well, anyway, I'm going to go ahead and I would like to ask Bill to go ahead and give, the best phone number that you can reach him at.
Yeah, my personal cell phone is 708-692-8040.
And then what I'm going to do real quick is put up here. Let's see if we can do this. See if this works. You guys can see that. This is actually all of their information. It might even be backwards because of our camera, but hopefully you can see that, and it has all of their contact information for the team and everybody that works with him, processors, whatever the case may be. So they have a nice big team to help you out with your needs. So don't be afraid to go ahead and give them a call and ask. Also, last time I didn't get to show you, but this is my brand new business card, and there's my number, 773-780-9602. Y para que la gente que habla en español, 773-780-9602. Also, I can be reached at mercedesrealtyinc@gmail.com. And Bill, I don't know if you want to give your email real quick.
Sure. It's W McCracken, which is WMCCRACKEN, and that's at peopleshomeequity.com.
Great. Well, Bill, thank you
my pleasure.
taking time with me here to help educate our clients. And God willing, we'll get to meet more of you guys out there. And if you have any questions, just go ahead and give us a call. Take care. God bless. Have a great day.